What up, Hyperchange? Welcome to another episode. Today we're going to do an analysis of the Dropbox IPO. This is the file sharing cloud-based service that recently went public with a big fanfare. They're one of those huge, unicorn Silicon Valley companies worth billions of dollars in the private market, resisting that urge to go public and IPO. Well, the good news is they finally caved. They went public. We can see their financials. We can see the business model. In this initial public offering, Dropbox listed 36 million shares. 26.8 million of those shares were being sold for Dropbox, the company, directly, so that they can get money to fund their growth and their business or whatever. And about 9.2 million of the shares they were offering were original investors cashing out. Really interestingly is that Salesforce actually committed to buying $100 million worth of stock at the time of the IPO. More in that later. So what does Dropbox actually do? They started out as a file storage service based on the cloud. You can keep all your documents on the cloud, keep them backed up. Photo sharing, you go on a big trip, you have all these pictures you took, you want to put them somewhere, all your friends can access them. Dropbox is your go-to space. Today, they're evolving, building on that cloud storage platform, but really evolving into a cohesive content management, collaborative, professional sharing platform that I think is targeting to get beyond just individual consumers and moving into the enterprise, which is a lot more lucrative segment. Just to give you guys a couple stats on the company, Dropbox has 500 million plus registered users. They're in 180 countries. 11 million of those users are paying. 80% of the subscribers use it for work. So it's interesting how they're positioning themselves as an enterprise player or someone who could move into the enterprise in their IPO. This is really important. The tone the company takes with its IPO documents, the story they're trying to tell often can give you a lot of clues about the direction they're headed in the future. And they also claim they have this little flywheel effect in their business, which I think is pretty interesting. The more content you have on the platform, the more people you're likely to share it with on their platform. And that means the more products you'll need on their platform. And then I'm guessing that makes you even want to store more things on Dropbox, which makes you pay more because you need more storage. The addressable market goes from sharing and network content to file collaboration to content collaboration to more of a productivity suite. And the opportunity, or TAM, total addressable market, is between 25 billion for file collaboration, 50 billion for content collaboration, and even more beyond that. So they're attacking a massive market. The company has a massive ecosystem of partners that they are teamed up with, which allow them to integrate with all of these different software services, enterprise apps, IBM, SAP, Oracle, you've heard of those, media and design, Vimeo, Adobe. All across the spectrum, Dropbox has this style of open ecosystem. 75% of teams are linked to a third-party app. They have 500,000 developers in their ecosystem. They're getting 50 billion API calls a month, which just seems absurd. Dropbox has this Venn diagram, which I love, which shows that 11 million of their users are paying out of 500 million. So just a very small percent, like around 2% of their users are actually paying. And I think they believe they can expand this rapidly. And it's also interesting to note, they show right here, they added 100 million users since just the beginning of 2017. So Dropbox has this sort of business model. They have a funnel. They get you to use the product for free. They're giving it out. They want everybody on the platform. And then eventually, as you get more entrenched, as you have more things on it, as you want to upgrade functionality, you start to pay for that service. Very freemium-esque model. And that is how they are going to evolve their business. Now, does Dropbox have competition? Of course. The two biggest competitors that I can think of are Box, which sounds the name like Dropbox and literally does almost the exact same business model as Dropbox. This is sort of my biggest qualm with Dropbox is I feel like the service is so commoditized. Like there's literally a company called Box that's built for enterprise file sharing that I've used the Box product, I've used the Dropbox product. They're almost identical in that you just upload files, you can store them, you can organize them. The core functionality is almost identical. Beyond that, I don't know, maybe there's apps and functionalities that separate the two. I'd love to know what you guys think in the comments because Box has already sort of established itself as the enterprise player in this space. Dropbox wants to go from consumer to enterprise, so it looks like they're directly attacking Box. Additionally, the companies do compete with Google Drive. I used to use Box for business. I used to use Dropbox for personal. I don't use either anymore. I just use Google Drive because I already have Gmail. I'm a huge fan of Google Drive, so I believe that is a big competitor as well. And just generally, I think it's easier to switch from these services than people really think. They just assume it's very sticky. I disagree with that. You can upload your files to a different service really easily if it saves you a lot of money and it's just more convenient. The just ability to store things on the cloud is sort of a commoditized business So I am really not convinced that this has a strong moat at all. But what is fascinating is Salesforce, as I said, invested $100 million at the time of the IPO. Salesforce is the world's largest customer relationship management tool, CRM company. They're on the cloud. They're worth, almost $90 billion in market cap. They did over $10 billion in revenue in their last fiscal year. Salesforce is in bed with all of the hottest companies in the world. They're hooked on the Salesforce platform for their infrastructure. So seeing Dropbox partner with them on March 9th was a huge deal because it meant Dropbox, had a friend in the enterprise space that it wanted to get into bed with and help cross-market their services. Then we heard that Salesforce was actually buying into the IPO, investing with about $100 million. This ended up resulting in about the purchase of 4.8 million shares worth of Dropbox, worth about $150 million at today's prices after the IPO pop. Salesforce owns about 1% of the company. What I think is also a twist to the story is a couple years ago, this document leaked with Salesforce's M&A targets. This was so interesting. It was basically Salesforce's PowerPoint of these are all the companies we're going to acquire. This is why we like them. This is what they do. Here's our radar of companies that we are watching closely. Box was on there and was one of the companies, even they note that the CEO had no interest, but it was definitely on Salesforce's radar. So to now see them pivot and get into bed with Dropbox with a partnership. So my kind of mini Moonshot Monday here in this episode is that Salesforce and Box are laying the seeds to merge. I believe Salesforce could be buying Dropbox in the very near term if they can sort of execute on this partnership. I think it makes a lot of sense. There are a ton of synergies. If Dropbox wants to do the enterprise well, there isn't a better partner in cloud and SaaS than Salesforce. Anyway, let's get into some charts. So Dropbox, since its IPO, has actually been pretty, not much volatility since the company went public. The stock opened a little over 30, fell to about 28 the next day, but has since sort of this consistent uptrend rebound. As I'm making the episode, is about $31 per share. The company has a software as a service business model, super sticky, super recurring. As you can see, when you break out the quarterly revenue numbers, just very consistent growth. This is sort of what all these software as a services companies like. Revenue currently over a $1.2 billion run rate given the Q4 2017 numbers. If we look at annual growth, you can see Dropbox growth has been pretty strong, going from 600 million to over 1.1 billion in sales in 2017. They had a 40% growth rate from 2015 to 2016, slowed a little bit to 31% in 2017 as they sort of hit, law of large numbers, but still growing very rapidly. If we assume they'll grow 25% in 2018, this would post revenue of 1.384 billion. So that's sort of what I'm looking for. I believe it's a little conservative. We'll see what they post. That's about the same growth rate as Box as well. In terms of profitability, the company on a GAAP operating income basis is not profitable, although they are improving pretty significantly. They were losing almost 50% of revenue in 2015. They lost 300 million. In 2017, they only lost about 10% of revenue, 114 million. The company seems like it's on the cusp of actually going GAAP profitable, so that's pretty impressive. Moving beyond profitability though into free cash flow, which takes away, these expenses of stock-based compensation, depreciation, which are real expenses and very important to pay attention to, but it's also, we can look at free cash flow too. You can see that the free cash flow has actually gone from negative to positive 305 million in 2017. As a business, I thought this was pretty cool because they're producing all this money, yet they IPO'd and also raised, another $700 million. So they have a bunch of cash on their balance sheet. They're making actually money from operations. Now they just raised a bunch more money. I don't really see a rational reason for them to have raised all this money on the IPO, except maybe they wanted a bigger cushion. Maybe they want to start investing heavily in growth. Maybe there's a company they want to acquire. I think that could probably be the biggest reason they wanted money. Or maybe they just wanted their shares to have liquidity, sort of like when Spotify IPO'd, they just wanted their employees who've been holding the stock for so long to finally be able to sell. Well, now Dropbox is doing that too, but just decided to raise a little bit of cash in the process. If we look at the company's valuation, Dropbox with 400 million shares outstanding at 31 per share, $12.4 billion market cap. If we divide that by my 2018 revenue estimate of 1.384 billion, we get a 9 times 2018 price sales multiple. I didn't include price EBIT because I think they're going to do about $0, right around break even in operating income this year per my expectations. That means that we'd be looking at an infinite PE ratio, so I'm just not even including that. They're still in growth mode. 9 times price sales is pretty expensive if you ask me, relative to Box, who in my opinion is probably the closest competitor to the company. Box is only trading at a valuation about 2.8, 2.9 billion. They're gonna do probably 600, maybe a little more than that, million in revenue this year. So Box is trading about 4.5 times 2018 revenue, while Dropbox is trading at 9 times. Twice as expensive on a price sales basis. Their growth rates are pretty much the same. So I think it's really interesting to see the market sort of give all this credit to Dropbox for apparently, their imminent disruption of the enterprise file sharing space, when Box is already pretty much that exact business. They're already doing it. They're already growing similarly, and they're valued at a much lower price sales multiple. I just don't really get why the market is giving Dropbox so leeway here. Once again, I think this business is kind of commoditizable, the entire file sharing thing. All in all, I'm actually not that big of a fan of Dropbox. I don't use the product myself. I think it's super replaceable. The valuation seems really, really expensive given what Box is trading at. Maybe since I'm not a user of the company, I don't understand their vision for the future and where this is going, and so it doesn't get me excited. So I'd love to know what you guys think. Apparently Steve Jobs and Apple tried to buy Dropbox in their very early days because of their focus on UI, a beautiful product. Apparently they turned down Steve Jobs and Apple. Then Steve Jobs went on to have this sort of famous quote where he said that Dropbox was a feature, not a product in itself. Apparently they are proving Steve wrong. If I was looking at the stock, the biggest thing that would get me excited or bullish on the company is Salesforce invested at the IPO. If you're investing today, you're investing at a pretty similar price to what Salesforce invested in the company at. And I think that indicates that not only are they partnering already on product, but that they could, Salesforce could really start to push Dropbox, potentially even acquire them in the future. Anyway, this is Hyperchange. That's my review of the Dropbox IPO. If you like what you see, please consider supporting us on Patreon. You can give $2 a month or more. You officially become a Hyperchanger. You get access to our exclusive newsletter. Make sure to check that out for more. Also, sorry for a lot of plugs, but Hyperchange finally launched a subreddit. This is something you guys have been asking for, so I put it together. It's still what I'm gonna call in beta mode. Like, I'm gonna tweak the formatting, gonna tweak the style, I'm gonna start adding more content, but the point is, it's live. Already had some amazing discussions about Tesla, the Model 3 ramp, the engineering equipment coming from Groman, which apparently got delivered. I didn't know about that. Someone posted about it. Actually, Trent posted about that on the Reddit, so shout out Trent. People are talking about cryptocurrency discussions. I don't know, just a ton of awesome stuff on the Reddit. Would love for you guys to join the discussion there, share links, just anything you got so we can expand the Hyperchange community. Anyway, I'll see you guys next time. Peace.